In the last video, we spoke about why you need a health insurance policy and how you can select one. In this video, we are going to talk about a life insurance policy, a pure vanilla term plan. Let's first understand why you need a life insurance policy before purchasing one. Now, the reason is you need to build a financial replica of yourself if there is someone depending on your income. If you have children, spouse, parents, if they are depending on your income, in that case you need to create a fund that will give them the same income if you are not there. And that's the only reason you need a term plan. Now the next question comes, till what age should I take the term plan? Generally we suggest you can take it till the age of 60. Reason being that after 60, you don't really have any dependence on you. You have accumulated enough money for your spouse, your children have started earning, your parents are not dependent on you. Hence, it makes sense that if no one is dependent on you, you don't need to unnecessarily pay the premiums. Now, there are a few people who take it till the age of 85. Their reasoning is that if I take it till the age of 60, I'll be paying premiums till the age of 60. But if I die at the age of 70, then all the premiums that I've paid till the age of 60 will go waste and my nominee will also not get anything. Well, the argument to this can be, if you die at the age of 71 or 72, then what? Then the premiums that you've paid till the age of 70 will go waste and the nominee won't get anything. So this can go on and you'll never get a correct number. You need to understand that insurance is a risk cover. It's the price that you pay for a good night's sleep. Do not mistake it for an investment. You should want that the insurance company shouldn't give you anything back. You should want that the premiums go waste. Now the third point is the biggest mistake that people make with their insurance is that they mix their insurance and their investments. Your insurance needs to be like a motor insurance. You need to keep paying your premiums, and if nothing happens to you, then the premium should go waste. Like if nothing happens to your car, the premiums go waste. If you try to get anything back from the insurance company, then it will do more harm than good to you. Generally, there are three policies which mix your insurance and your investments: your money back policy, endowment policy, and ULIP policy. The fourth point is, what is the amount of insurance you should buy? Thumb rule is 15 to 20 times of your annual income should be your sum assured. The reason being that even if you get a 15 to 20 times sum assured, it will protect your family for the next 10 to 15 years at least, and that is what we need from the insurance plan. It should protect our family's expenses for the next 10-15 years at least. Now coming to the fifth point, which is riders. Should you take them or no? Before going to the point of whether we should take them, understand riders are just an add-on to your insurance policy and not a compulsion. There are several riders, but out of that only two are worth taking. One is an accidental death benefit and one is a critical illness. An accidental death benefit will provide you with an additional sum in case your death is through an accident, and a critical illness will help you in a situation when something very severe affects you, like a cancer. It gives you a lump sum amount in one go so that you can take care of that medical expenses. Next point, the most common question that is asked: which company should I go to for a term insurance? And then all the ratios come in, like CSR, claim settlement ratio, ASR, amount settlement ratio, this ratio, that ratio. Understand CSR, ASR, they are ratios, but they are not really helpful. It's because most of the companies will have to the north of 90-95% of claim settlement ratios. We really don't know that why the claim is not settled. We need to go in and dig deep about why the claim is not settled. Is it the company's fault or is it the customer's fault? On what basis have they rejected? It is a very deep dive research that you need to do. Keep it simple. You can go for any of the big players in the private sector. The ones which have a bank backing it are fairly reliable. Don't go much into this. Just understand that there is a procedure to get the life insurance policy, and some companies do it in a much easier way, whereas some companies make it really tough for you to get the policy. They have a lot of paperwork and this test. They'll call you for a medical test, and if they are not satisfied with your medical test, then they'll actually take your medical test, take your blood report. Such procedures will happen, so take a reliable company and take a company who's doing it since a long period of time. The seventh point is the most important point. Do not lie to the insurance company while taking the policy. If you consume alcohol, mention it. If you are a smoker, mention it. If you do drugs, mention it. Whatever it is, mention it. In case they come to know you had been doing all this and you have not mentioned it, they can reject your claim. This is where it gets complicated, but we complicate it because we are not true while giving our data. And also remember that in situations where you're drinking and driving and you meet with an accident, you're not going to get the claim. If you do some dangerous stunt with your bike and you meet with an accident, you might not get your claim. There are several reasons why you don't get your claim, so read the terms and conditions once. I suggest you get a good person, a relationship manager or an agent who can handhold you through the entire process of how to take the policy, which policy would suit you. That person is with you from the start and will also help you while your family needs the money if something happens to you. To summarize the entire video, first point, why do you need a term insurance? You need it because there are people dependent on your income. Second point, till what age do you need it? We would say till 60 is sufficient. If you want to take it till 85, it's fine. You can take your own call. Third point is very important. Do not make the mistake of mixing your insurance and your investments. Keep them separate. Fourth point, what amount of insurance you should take? Typically 15 to 20 times of your annual income should be the amount of insurance you should go for. Fifth point, coming to the riders, only 2 of them are worth taking: accidental death benefit and a critical illness. Sixth point, which company to select? Go for a reputed company which has been doing it since years and don't overthink on this. Seventh point, maybe the most important one, do not lie to the insurance company while giving your data. And if you like this video, you can also look at my video where I'm explaining the Mediclaim benefits and why you should take it and what all you need to understand before taking a Mediclaim.